Hey, welcome back, options traders. Well, do you make the biggest probability trading mistake? Now, don't feel bad if you do. Nearly everybody makes this mistake. It's a common misperception, and I will show you why it becomes such a bad mistake for traders. But let's first talk about the mistake. And to do that, we're going to start with a question. We're going to, let's say, flip a coin 10 times, and you would expect to get 5 heads. I think most of you know that there's a 50% chance of getting heads. So if we were to repeat this over and over, 5 would be your best guess. We could certainly deviate from that, but 5 is what we should expect. But now let's do it again, but this time with 100 flips. And we should expect to get 50 heads by the same reasoning. So the question that we have here is, which guess is most likely to be correct? So let's call this 2 different games. We play the first game, we're going to flip it 10 times, you're going to guess 5. How likely is that to be the winning answer? Then we're going to play it a second time and flip the coin 100 times, and you're going to guess 50. How likely is that to be the correct answer? Well, if you're like most people, you will expect to be far more correct by flipping it 100 times. Everybody thinks that the coin flip would tend to even up. So if we had a few more tails that might start to show up because we're flipping it so many times, that we should start to see some more heads and that things will start to even up. And that we should find far more times that we would get 50 heads out of 100 tosses than we would get 5 heads out of 10. Well, is that really true? Let's go have a look. So let's start with the first one. We're going to flip a coin 10 times. What's your best guess on how many heads will show? Well, again, we just said it was 5. Well, if we were to graph this and look at all of the times that we got 0 heads, 1 head, 2, all the way up to a maximum of 10, this would be the distribution. We would get a nice little bell curve. And take a look at the guess for 5, right there in the center. And it is the tallest bar. So it does coincide with our intuitions that that should be the best guess. What's the probability? Lines up with roughly 25%. And so yes, that means you're going to be wrong 75% of the time. So think about that. Your best guess is actually far more likely to be wrong. But 5, the number 5, is actually your best guess. But let's also take a look at something else. How far could you deviate from 5? Well, the very most you could be off is by 5, right? And that's if you got 10 heads. Or you could be off by 5 on this end if you got 0 heads. In other words, you got all tails. But you could still only be off by a maximum of 5. And so you might think, well, 5 isn't a real big number. Well, that's true. That's one way of looking at it. But it would be very big in percentage terms because it would be 5 on an expectation of 5. Now, yes, I know it starts to sound confusing, but you can see where the confusions come in and the misperceptions. So there's 2 things that we're going to look at. How far could you drift in actual numbers? And then what is the percentage chance of being right? All right, so keep these numbers in mind. 25% is our best guess for 10 heads. Let's do it again for 50 flips. What's your best guess now on how many heads will show? Well, now this is the bell curve we would get. We're going to do the same thing, record the number of times that we get 0 heads, 5, 10, and so on. So the worst we could do is to get 0. The very best we could do is to get 50. But our best guess is right here in the center at 25, right on that red bar. But look at the percentage of times that you'd be correct. It's actually dropped to about 11%, and that means you're going to be wrong 89% of the time. So see, this is where people start to think that this percentage has to start getting bigger, that you'd have to be nearly 100% correct by guessing 25 heads. And we can see that that's not true. It's moving in the opposite direction. What's happening is that the bell curve is getting taller and skinnier. But we're also inviting for more errors to be produced. Now, it's a little hard to see, but there are some little tiny bars out here, very low probabilities, but we are allowing for more drift. So let's look at this in the second viewpoint and say, is it likely to be off by 5? So see, now if I go from 25 to 30, oh yeah, that's very well within the bell curve. See, in the first example, if you went off by 5, that would have been fairly unlikely, because that would mean you got 10 heads or 0. But now we're seeing a deviation of 5 is not all that unlikely. See, it's exactly the opposite of what people would think. They would think that it would start shrinking. What's shrinking is the percentages, but the size of the drift is getting bigger. Now, in this case, can we get off by 10? Here's 35. It's definitely getting to be a low probability, but it doesn't look like it's really out of the question that we could be off by 10. See, in the first example, there was no way you could be off by 10. Worse, you could be off is by 5. But because we've now flipped the coin more times, we have more things to go right and more things to go wrong. So again, it's getting wider in this direction in terms of the raw numbers, but in terms of the percentages, it's shrinking. And again, this is the misperception. So let's try another one. Flip a coin 100 times. What's your best guess now? Well, it should be 50. And again, back to the mistake, most people would say, oh, you're almost 100% certain to get 50 heads now, because I've heard of this concept that things start to even up in the long run. So you're going to be nearly 100% certain to get 50 heads. Well, let's go do the same experiment. We could have a minimum of 0, if we got all tails, and we could have a maximum of 100. And so if we were to plot all of the possibilities in actual experiments, this is what we would get. Notice that the bell curve is now getting taller and skinnier, and right there in the center, that little red bar is your best guess at 50, but it only happens about 8% of the time. And that means you're going to be wrong 92% of the time. It's probably just the opposite of what most people think. They would think, oh, I'm going to be right 92% of the time. Very low chance of being wrong, and it's just the opposite. So let's look at this problem from our second viewpoint. Could we be off by 5 now? Well, here's 5. I mean, we're still pretty much in the center of the bell curve. Now it's not at all unlikely to be off by 5. See, when we flipped the coin 10 times, it wasn't impossible, but it was certainly on the unlikely side that we would be off by 5. But look now it's actually quite likely. And in fact, could we be off by 10 up here at 60? Certainly not out of the question. We're definitely more to the right side of the tail of this bell curve, but it's certainly not like way out here. It's still a very good possibility. And in fact, it looks like we could be off by maybe 15. See, here's 65. See, in the first case, there was no way we could be off by even more than 5. In the second case, when we flipped it 50 times, it was getting pretty unlikely that we would be off by 10. But now we're saying, could we be off by 15? Sure. And that's because we flipped the coin far more times. We have more of a chance for things to go right way out here and more of a chance for things to go wrong. So as before, we've got these little bars out here. They're really hard to see, but they are there. And we're starting to invite these probabilities where we had no chance for that to happen when we flipped it 10 times. So again, to clarify the problem, is that the probability that you drift in actual numbers, the raw number of heads, is actually increasing. We could certainly see that we're off by 10, off by possibly even 15 or 20 in the case of flipping it 100 times. But those deviations compared to the expectation in percentage terms is falling. All right, so that's really the misperception. Everybody thinks that things are going to even up in the raw numbers. They do not. They actually drift apart, but it's the percentage of that drift that's starting to get pulled towards lower and lower numbers. So always remember, it's the percentages that are getting closer. It's only in this sense that things tend to even up. So if we flip a coin 10 times, 95% of the time, you're going to find that you're somewhere between 18% heads and 82. So do you see how big that range is in percentage terms? But if we flip the coin 100 times, 95% of the time, you're going to find that you're going to get 40 to 60% heads. So even though the number of heads was getting potentially bigger or smaller, that drift is getting bigger or smaller, the percentages, notice, are starting to shrink. See, look how wide this interval is from 18 to 82, and this one's starting to narrow up. 50% is our best guess. We could maybe be plus 10 percentage points up this way or down 10 percentage points this way. It's starting to shrink in percentage terms. Now, what if we flipped it 10,000 times? I didn't do this as an example, but 95% of the time, you would get somewhere between 49% heads and 51% heads, even though the number of heads, the raw number, would actually drift. So if we flipped it 10,000 times, could we be off by 5 heads? Oh, easily. Off by 10 or off by 15? See, those were very unlikely in these scenarios, but they're extremely likely in this scenario. But it's in the percentage terms that we start to see these ranges start to shrink. So again, the big key for this video is only the percentages get closer to 50%. It's in this sense that things tend to even up in percentages, not in the raw numbers. Now, why is this so critical for options traders to understand? Because they get it exactly backwards when they start looking at strategies, let's say, that are neutral. Maybe a condor, short iron condors. You hear a lot of people loving to play those strategies because it looks like free money. And as they go out to longer and longer dated, they think it's becoming more likely for the stock to stay in the center, and it's becoming less likely. And that's why you'll find that those strategies are actually getting cheaper because of risk and reward. So to see how these problems come into play and the misperceptions, let's jump over to the Thinkorswim platform. So now we're into the Thinkorswim platform, and I'm clicking on the Analyze tab. And under the Analyze tab, you've got several sub-tabs. I'm on Probability Analysis. Now, without going into the details, what you're looking at is this cone, and we have days across the bottom. So we're going further out in time. Here's 20 days, 30 days, 40 days, and so on, out into the future. And for this stock, I happen to have AMD, Advanced Micro Devices, on. So you can see that as we add more and more time to the clock, or as we're kind of looking further into the future, the probability for that drift starts to increase. That's why the cone is getting wider out on this end compared to this end. These numbers are showing the high that we would expect and the low based on this date down here, whatever you're lined up with. Now, of course, we can change the probability right up here, 68%. That's one standard deviation. In the presentation, I was using 2 standard deviations, so we could maybe go to 95%. And what's going to happen is that this cone's going to get wider. But the thing that you want to see is here. Take a look. What's the probability that the stock gets above this number? Now, I've set it to where it's plus or minus 10% from the current stock price. There's a lot of different settings in Thinkorswim that we could do. We could even pick our own numbers. But if we're looking at plus 10%, look what happens to the percentages. With a very short time to expiration, 1 day, 0.16%. If we go to 8 days, it jumps to almost 14%. Then 20, 24, 26. Do you see how these numbers are increasing? And this is because we are allowing for more drift, just like we saw with the coin flips. Look down here below. We go from 0.06, 13, 21, 30. We're getting bigger and bigger numbers out here. But look in the center. See, this is where people like to lean toward longer dated, let's say, short iron condors, because they think it's becoming a better probability, because they have this misconception that the coin flips are going to start centering up in terms of raw numbers. And just like with stocks, they're saying, oh, the stock price is far more likely to be in the center if we go out longer and longer dates. But take a look at the probabilities. 45%, 33, 26. Look what's happening. They're shrinking. 12, 10, 9. Look at this. Only a 4% chance that it's going to be right there in the center. You're far more likely to be wrong if you're going out longer dated. And that's exactly what we saw in the presentation. So if you are going to longer dated strategies, let's say that are neutral, you've got a far bigger chance of being wrong. And that's why those strategies will produce bigger rewards, because there's more risk. Now, on the flip side, we could also say if you are looking for the stock price to make a move, let's say to go up with calls or down with puts, you're far better off going with longer dated options. See, if you're trying to look for these big moves in the short run, there's just a very low probability of that happening. But the main thing to understand is that when you're looking at these probabilities, or even if it's just intuitively, that traders get the idea exactly backwards. They think that in the long run that the numbers have to shrink and the percentages have to increase. And it's just the opposite. The numbers can get bigger and bigger deviations, but in percentage terms, they shrink. And so if all of this sounds confusing, this is where training will pay big dividends. And so for those who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. It's all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.